Hey everyone, it's Mike Andes. Today we are doing another live show. We're doing a call-in show, so feel free to call the number below. But before we do, I want to talk about the recession that I believe we are in slash going into. And I've talked about this literally for 7, 8 months now. But officially we're going to be in a recession, I believe, in a couple of weeks, because theoretically what a real recession is when you have a negative GDP or gross domestic product, a negative number annually for 2 quarters in a row. So we've already had 1 quarter, but in a couple weeks, the new GDP information is going to come out for Q2 of 2022. And I believe it's going to be negative. And if it is not negative, it's going to be slightly positive. And if it's slightly positive, I'm going to believe it's something like the inflation number, which is completely false and fabricated by our government. And if you look anywhere in our economy right now, you're seeing massive holes, and you are seeing it in the stock market. You are seeing it in the real estate market. You are seeing it in the amount of money that people have in savings. You're seeing it in company earnings reports. You're seeing it in massive layoffs. So the fact that if anyone in 2 or 3 weeks, whenever the print, I think it's the 29th of June, I could be wrong, when the GDP number is actually going to be given publicly. If that number is not negative, I will be shocked out of my mind, and I will probably not believe it. But if it is, which I expect it to be negative, we are going to see on the front line headline news of every single newspaper, magazine, and news outlet media that we are in a recession. It's going to be all over the place, and people are going to freak out. And it's literally what we talked about has happened almost exactly over the past 6 to 8 months. And so before we get into 2 weeks, in 2 weeks when everyone's going to freak out, let me talk about a little bit why that's happening. I came across this report because what I usually spend my nights doing is looking at reports, and because I'm boring. And I'm going to show you some small business trends that I find pretty alarming. But before I do that, I need to take down my banner here because otherwise you cannot see it. So I am going to be doing calls right after this. So make sure that you do go ahead and call the number that was on the screen there. I'll get back to it in just a second. Let's go ahead and jump into some numbers. All right. So this is small business owners in 2022. Now, this is a few months old data. It's very difficult to get data that's like literally up to date. And in this type of economy, literally every few weeks counts. And so I hope you can see what I'm trying to show you here. And that is just these numbers on this graph. All right. So first of all, small business owners in 2022. Some really interesting stuff here. First of all, mostly male, mostly white. And it's very surprising. Like there's twice as many business owners that are Republican, 40% versus almost 20% for Democrat. But also notice that a third of people are unaffiliated. So a third of business owners like, forget this. Either one's going to get me in trouble, and I'm not going to take care of me. So forget them. You got age range here, some information here, happiness level. All right. So their level of happiness. Okay. What their motivation was to get started in small business ownership. 61% were dissatisfied with corporate America. I promise you, that will change inside of a recession when all of a sudden job security becomes very, very, very important. So I'm just showing you these numbers. All right. This one's really, really crazy. Look at this. 65.3% of businesses are currently profitable. Now, this is 3 months ago. In my opinion, this number is probably more on 50% as of just being a few months old, because the past few months have been I've seen a massive ramp up of just how intense and acute the economic issues inside of our country are. And they're being hidden by data that is months old. So even if you look at unemployment numbers from months ago, if you look at a lot of different indicators in the economy, even a few months difference is massive. So when we look about just a few months ago, 65% of businesses are currently profitable. What that means to me, what if you can read the inverse of that, 35% of businesses are reportedly, these are the ones that actually are willing to report, that they are unprofitable. So this to me says, look, more than 1 in 3 small business owners are not breaking even, they are losing money. It'd be literally like saying, can you imagine having a stat that said 1/3 of employees show up to work every single day and pay their boss to go to work? That's exactly what this profession of small business ownership is. More than a third of small business owners as of January 2022 were literally losing money to stay in business. They're unprofitable. Okay? I have no joy in these numbers, by the way. But I would imagine this number is more on 50%. And as we head into a economic contraction and a recession, that number will go below 50%, which means the majority of small business owners will actually lose money in 2022. And in 2023, I believe we'll have a record number of closed small businesses since 2007, 2008, and 2009. Basically the last recession. We haven't had a recession for a very long time. And because we've had no recession for so many years, I feel like we're going to have even a more intense withdrawal and collapse of the small business market. So it's going to be very, very interesting. All right, let's check out the next graph here. Let's check this out. The Great Resignation. How difficult was hiring this past year? So this is looking back into 2021. And if you look at the chart here, more than 70% of people said it was difficult. So very difficult and somewhat difficult. Those combined, more than 70% said it was difficult to hire people in the past year. Again, this is 2021. I would imagine this number is probably more like 90 to 95% in 2022. All right. So these are just some really interesting things. What changes are you implementing in terms of hiring? Trying to increase compensation, improving retention, expanding recruitment, increasing benefits, hiring bonuses, expanding training programs. These are things that people are doing. Most essential skills for employees. There's a whole bunch in there in terms of communication, cause of difficulty filling these positions, low number of applicants, or lack of interest in your organization. Literally 50% of small businesses are saying that they're not getting enough applicants because people are just not interested in working for them. And then 30% are saying competition from employers. Oh, let me pull this up for you. Let me pull this up. Let's do jobs data USA. Look at this. Check this out. Okay, I've pulled this up the past few months. Let me go ahead and I want to pull up. Let's see here. Let me see. Here we go. This one's pretty raw, so I'm not going to actually show you this in super detail because this is like a very boring way of showing the information. But all of that to say, if you go through the BLS most recent update, the Bureau of Labor Statistics, it's going to tell you that there's 3.6% unemployment, fantastic, and and non-farm payroll, which means people who don't work for farms, rose by 390,000 in May. All very positive. But if you actually dig into this report, what you're going to find is that small businesses lost jobs in the month of May. Okay. You're going to look at every single sector, leisure and hospitality up 84,000 jobs. Let's go. Food service and drinking places up 46 jobs. Let's go. You can literally go through every single industry and see an increase in the number of jobs. Even in what was it? Construction, 36,000 jobs. Let's go. All right, 17,000 for specialty trade contractors like lawn care, landscapers, etc. Like, you can just go through this and see all this positive data. All right, and then if you actually look at where the jobs were going, and you actually break down what size of company these jobs were going towards, every single one of these job increases went to big companies with 500 plus employees. And in fact, there was a negative 96,000 jobs added in May of 2022. So what we are seeing right now is a massive shift away from small business and towards large companies. And then when you look at those large companies, because the first businesses that get impacted in a recession are small businesses. Then when you start seeing big businesses starting to raise the red flags, they're doing a bunch of layoffs and they're starting to project in the future for lower sales for their 2020 fiscal reports. Trust me, we are going into a recession. All right. And it just becomes more and more clear. And until it's like slowly turning up the heat until finally everyone in a couple weeks are like, we're in recession. Oh my goodness. Oh my word. It's like, look, should have been something we've been planning for years ago. This should have been, I talked about this yesterday. I made a post on YouTube, Facebook, and Instagram about basically I was imploring people to start focusing on recurring work. I'm going to get into that in just a second. Last chart I want to go over. The effects of the pandemic. All right. So do you expect your business to survive through the pandemic? 85% said yes. I guarantee you less than 85% survived 2020, 2021, and 2022. All right. How confident are you in small business as the pandemic matures? Check this out. 6.5% of small business owners are very confident in their small business as the pandemic matures. It's incredible. It's incredible information. All right. And unfortunately, as optimistic as I like to be, it is not going to get any better. And for everyone that has been saying for the past 8 months that I am trying to make catchy thumbnails in order to get people to be able to get riled up about the economy, and then you go all the way back to October of last year when I sold half of my stock portfolio, which was over $500,000 worth of stocks. And I said, look, I do not see a good 2020 on the horizon, and we're preparing our businesses for recession. Months ago, I told my managers, we're going to get all of our businesses ready for margin compression, the lowest margins we've seen, and we're going to get ready for a 2 to 3 year recession. I don't think it's going to take 3 years. I think it's going to be more like 6 to 12 months of really, really acute impact on the economy. But yesterday, I made a post about the importance of recurring work and recurring revenue in your small business, especially service-based businesses, home improvement, landscaping, lawn care, contractors, etc. And I literally begged people to start focusing on getting recurring work. All right. I'm going to make a video about this later this week. But Keith Kalfas, a prominent YouTuber, he made a video this past week about how he raised his prices. And there's nothing against Keith, by the way. This is just the economy. It's not his fault. I'm just using him as an example because he's public about his information and data, which most people aren't because they just hide behind last year's numbers. And so he was honest enough to say, hey, look, I got 300 calls in my business, 300 leads. I weed out 90% of those. So I qualify it down to 10%, which is 30. Okay. And in the past, out of those 30, I would have gotten 15 accepted jobs, or about 50%, 52%, he said, of close ratio on his projects. And he does landscaping and project-based work. He doesn't do recurring. He doesn't do mowing or anything like that. However, he does do, sorry, take that back. He does a little bit of recurring in terms of projects, in terms of landscape recurring maintenance. So he, I would assume, trims the bushes, pulls the weeds, and maintains a customer's landscaping. So he raised prices because of all of the inflation that's happened over the past several months. And he raised his prices, and on his recurring jobs, he lost just a few percent. I think it was like less than 10% of his customers he lost because he raised his prices by like 20%. He raised his prices to new customers for new projects. And literally his close ratio went from 50% down to 10%. So instead of closing 15 out of those 30 jobs, he closed 3 out of those 30 jobs and had a 10% close ratio. And so this is the absolute epitome of what happens during a recession. And this is what I've been talking about for the past 3 to 4 years, encouraging everybody inside of Augusta Nation and everyone on this channel to get ready for recession. Because during a recession, it comes very, very quickly. And everyone that has been saying, oh, you're crying wolf and everything is great and the housing economy, my market is doing fantastic. Just wait a couple more months. All right. And I've been very consistent about saying it's going to come, the recession. I've been more consistent in the past year of telling you it's going to happen in 2022 and showing you by the financial moves I'm making, preparing my businesses, selling off my investment portfolio to get ready for this. And now it's going to happen. It is going to happen. And so the reason recurring work, if you look at what Keith talked about, look, 90% retention on his recurring jobs that he raised prices on, that he can now be profitable on. And 80% less jobs accepted on new work. So from going from 50% close ratio or 15 jobs accepted down to 3 jobs accepted, that's an 80% decrease in your close ratio on new work. This proves 2 things. I made a video last week about raising prices on existing customers versus raising prices on new customers. And the stickiness of your product is coming into play when you raise prices on existing customers. And so a lot of people they thought that video was horrible. Like, that's so wrong that you would raise prices on existing customers, but not new customers. No, you have to realize the reason your product is sticky and the reason that you should raise prices on existing customers over new customers is because customers that are existing, you've already proven to them your worth. You've already proven your value to them. Raising prices to them, the reason they're willing to stay with you is because the alternative to not going with you is going and finding another contractor and going through that whole process again. Whereas if you're raising prices to a new customer, somebody who have not done service with, they don't know if you're good, they don't trust you, they haven't built up that relationship with you, guess what? They're going to be more inclined to leave. They're going to be more inclined to be part of that 80% that decide, you know what, let's go get some other bids and go with the cheaper option. And so this proves two things. One, recurring work is more sticky. And number two, it is going to stick around longer during a recession. Because if you raise your prices and you lose 80% of your projects, what's going to happen as inflation continues to ramp up over the next 12 months? So I've talked about recurring work for a long time, and a lot of people laughed at me because they said there's no money in mowing. And so, I don't really talk a lot about, gloating back at the people who say stuff, but this is the time. And for everyone that's still saying that, well, my market, I'm booked out 6 months with project. That's fantastic. But eventually the real estate market's going to catch up. What you're seeing in the stock market, and you've seen, bull market for years and years and years. And all of a sudden we have this massive downturn, and every single stock exchange is in bear territory and down 20% or more. The Nasdaq's over 35% down. Just wait till that hits the housing market. And everyone's like, oh, well, there's just not enough supply of houses that are for sale. So the housing market will never crash. I don't think it's going to crash. I think we're going to have a 10 to 15% correction. But for everyone that's purchased in the past 4 or 5 months, they're going to be upside down on their mortgage. And yes, they have better credit now than 2007, 2008. And that's what's going to keep us from a crash in the real estate market, is the fact that everyone's much more qualified buyers. However, when you're 15, 20% underwater on your mortgage, you're more likely to go and go through foreclosure. We haven't seen any foreclosures because everyone's values are going through the roof. But guess what? Now with interest rates going up, people cannot afford those houses, and you are going to see the cost and the value of these properties start to plunge, right? And so I've said this for a long time. It's just starting to happen. People are like, oh, like I'm starting to notice more for sale signs on these properties. I'm starting to see more for sale signs on, taking longer to sell these houses. Yeah, things are not flying off the shelves like they were just a few months ago, because now interest rates are 6 and 7% on a 30-year mortgage instead of 2 and 3%, which basically means the cost of that mortgage is literally 30 to 40% higher than it was just 4 to 5 months ago. So it's going to be a crazy time. And I think that as small business owners, we have to buckle down on creating better systems. We have to make sure that we are able to retain talent. And most importantly, the thing you can start doing right now, if you're listening to this, is focus on some sort of recurring work. I beg of you. The reason everyone that is in existence today, I should say 90% of people that are in business today, small business owners in project-based work only, are saying how great it is and all the money's made in projects, is because most of them, 90% of them, were not in business in 2005, 2004, 2003, when everything was fantastic and the market was going amazing. The reason you don't hear about the people, because most of them went out of business. And through 3 years of 2007, 2008, 2009, they cannot stay in business. Get recurring jobs. You're going to be more sticky. You're going to be able to raise prices more. And you're going to be able to get through this recession. Discretionary income when it comes to project-based work is going to sink through the ground. Over the past year, the very first Augusta Lawn Care location in Bellingham, Washington, last year, we did about $1.6 million in revenue. Did over 20% profit margin, and I took out over $300,000 in distributions after taking a salary. This year, that will probably be half of that. Why? Because we raised prices in June instead of like what we should have done, and that was in February. We did not do it because we wanted to retain all of our customers, and we were thinking more about along the lines of trying to retain and not raise prices during when the Ukraine crisis happened, the war started, and all of a sudden gas prices spiked. We didn't want to do it right at that moment because we didn't want to have a double shock and lose customers. So we raised it in June. So it really hurt our profit margins in the first half of the year. This year, I expect to take less than half, maybe a little more than half of that number of distributions from that one location. Why? Because we had to add health benefits. We had to increase wages and cut hours to retain employees. We spent way more money than normal on attracting talent. And all of that while literally a doubling of our fuel prices. And if anyone wants to ever wonder why everything is going up in price, every single thing, like literally stop whatever you're doing right now, look around your room and ask yourself, is there anything in this room that was made without the use of oil? News alert. Nothing. Absolutely nothing in your room was made without some form of the production, some form along the supply chain being used with oil. Like, oh no, this water bottle is eco-friendly. No, no, no. This was made with a hydro press or some sort of a press machine. And this plastic probably used some sort of a mold, which that metal was fused using oil. And this rubber was no doubtedly is a petroleum-based product. Oh, and all of the stitching was made in a factory that was ran off of oil. So when the price of oil doubles and triples like it has over the past 6 months, everything is going to go up in price. And if everything goes up in price, guess what? Wages are going to go up. The cost of everything, including parts, supplies, grass seed, fertilizer, everything is going to go up. And if you think that's going to slow down in the next few months, wake up, because we are not going to be able to solve the problem. We're not going to somehow get the Keystone Pipeline set up in the next 6 months. It's not happening. And then the fact that our oil companies do not want to produce in the United States because of the way they've been treated from the government the past couple decades, they're not going to. And by the time they actually invest hundreds of $1 millions in infrastructure, in 2 years, you're going to have a new administration. It could be completely different rules. And then 4 years later, completely different rules. So why in the world would they want to create refineries and spend hundreds of millions of dollars investing in infrastructure in the United States? They're not going to. So we're just going to see an increase in prices going up. Do we think that the war in Ukraine is going to end like tomorrow? No, it's not going to. And by the way, we have sanctions on Russia, which is the third largest oil producer in the world. And they're not hurting because guess what? They're just going to go sell their oil to Brazil, China, and a whole bunch of other people that are very happy to take their oil. So the fact of the matter is oil being high as high as right now. And like I said, when it first happened in March, every single time that a barrel of oil has gone over $100 per barrel, we have gone into a recession. So that was just another indicator that, hey, yep, we're going to a recession after we went at 100. Oh, by the way, it's like 150 right now. I think it's at least 130, but it's getting very, very high. It's crazy. So I'm on a little bit of a rant here about oil, about inflation, about everything going up in value, in costs, and margin compression. It's going to be the fittest of the fit will only survive the next few years. I've been very trying to encourage every industry, whether you're in lawn care and landscaping or roofing or fencing, every single industry, you can ask yourself, how can I make recurring revenue a bigger part of the chunk of the revenue that comes to me? So I'll talk about that first location that I last year had $300,000 in distributions plus a salary. This year we'll have a salary plus probably 150, I'm guessing, in distributions, like literally half. Why? Because we took and we got very focused on one thing, recurring work. We want work that is simple and that we can get mostly recurring work from. So we have changed from about 45% of our work being recurring to now 75+% of the work being property cleanups and mowing. And that's been a hit on revenue. And so that's why we have the margin compression, is because if you have fixed expenses and you go above that and you have a very profitable business, you're going to have a whole bunch of profit like we did last year. If you bring down revenue, but you still have those fixed expenses, you're going to have less margin. But I can guarantee you in 2023, the business will be stronger than ever because we've set it up this year to take basically no projects on besides simple services and mowing. And those are the companies that are going to win in 2023. They're the ones that are going to survive, be able to hire employees. Because guess what? Unemployment is going to go back above 4%. It's going to go back above 5%. I believe it'll go above 6%, possibly even 7% as we go into recession. How? How do I know that? Because what we're going to see is big businesses start to lay massive amount of people off. Tesla just laid off 10% of its workforce. Look at Walmart, Target, all of these companies. What are they doing? They're cutting workers. And so when the big companies start to do that, instead of just the small businesses, unemployment's going to go up. And when unemployment goes up, guess who's going to take the money? The companies that can still grow and expand during that time. The companies that are going to be growing and expanding are the ones that are doing recurring services and not the ones that are based upon discretionary work that are project one-time, one-off jobs. And when recession happens and and real estate values start to plummet, people do not want to spend money on home improvement. They want to spend money on home preservation and preserving the asset, not growing or building or making the value of that asset go up. And everyone laughs at me because they don't remember or they were not around in 2007, 2008, and 2009. And guess what? I wasn't either. I was getting started. In 2008, I was just getting started mowing lawns. But I made sure as I went through my MBA, as I've started business, that I talked to a lot of people that went through that era. And I read a lot of books and I read a lot of articles about exactly what led up to the 2008 crisis and what people had to do to get through it and what businesses survived and which ones went out of business. And I've talked about this for years. So focus on recurring work, focus on increasing prices on that recurring work because it is a more sticky service than one-time jobs. It's going to be more recession proof. Focus on being able to get your business in a financial position to over the next 6 to 12 months. As unemployment goes back up, you're able to take advantage of it and hire people for pennies on the dollar when all of your competition is going out. The people who are going to feel this the worst are, number one, people who are focused only on projects. I don't think you need to focus just on recurring services. You don't even need 75% of your revenue to be on recurring services like we do. What you do need is at least 20 to 30% of your revenue coming from recurring services. And you're like, man, well, I don't do mowing. And I don't know even landscaping industry. Every single industry you can create some sort of recurring revenue and warranty or service based upon the one-time jobs you install. If you do roofing, guess what you can do? You can sell annual cleanings and checkups on the roof. You can sell gutter cleaning. You can sell the ability to be able to get off, pests off of the roof. Like, there's a ton of stuff you can do. You just got to get creative. You start thinking outside the box. Focus on those things, and you'll stay in business to the point where when things are on pennies on the dollar, and it's not impossible to find employees, those will be the companies that win. The people who are going to feel this the worst, like I said, are the ones that project-based only, and the ones that have between 3 and 15 employees. The ones that are above that are going to be financially able to get through this. The ones below that are going to be able to also be able to financially get through this because they are the Chuck and the trucks. I say a statement that was wrong on my last video. I said Chuck and the trucks will go out of business. When I said that, I did not mean solo operators. What I meant was the person that had no systems, was doing things under the table, would just give a call or a text from a customer, go do the work. Those people will go out of business. The ones that won't go out of business and will stick around and will actually thrive, and there'll be more of them, is people just doing work on the side on the weekends by themselves. They'll be fine, but they'll also get a job once the economy recovers. What I'm most worried about is people between 3 and 15 employees, because they're the ones that are going to have had a very difficult time this year hiring. Their margins have gotten squeezed with inflation and with wage inflation. And when people talk about, oh, it's 8% inflation, no, it's not. It's like 20%. Look at the numbers, strip out some of the things that move really slow, like real estate. Look at rent. Rents are going to continue to go up like crazy. I said this in October when I sold off half my stock portfolio, and I said, hey, I'm buying real estate, and here's why. I said, I don't think the value of these properties are going to go up, but rent is going to continue to go up like crazy. It's happening right now. The rents in buildings that I own are now more than double what they were less than 2 years ago. And some of them are almost double what they were 6 to 8 months ago. And so this is going to continue. When inflation's not going away, sorry. And the cost of fuel not going down, sorry. The importance of recurring work is not going away, sorry. And if this is an extended downturn, which I don't believe it is, honestly, I think it's going to be 6 to 12 months. But if it does, that is when people will actually start to close businesses. And I was looking at some other data. It was something along the lines of 60% of small businesses. Let me think about this for a second. It was either 60% of small businesses or 60% of the jobs that were employed by small businesses during the recession of 2007 to 2009. 60% of the jobs were gone, vanished, disappeared for small businesses. And so if you look at the past few months of jobs reports and you see literally negative growth in the amount of jobs that small businesses are having, I get very, very concerned. All right, that's enough of a rant. We're going to go ahead and have the first caller come in from 612. Sorry, you've been holding for a very long time. 612 from, it says Minnesota. You're on the show. Go ahead.
Hey, what's going on, Mike? How you doing?
Good. How you doing? Sorry for the long wait.
Doing pretty good. Yeah, no, you're good. You're good. Hey, I was calling. You made a video a little while back about like automatic mowers, like robot mowers and stuff like that. And I was just calling to see what you think about about that and see if that's going to be a good hedge against the labor shortage, going forward. I know the robot mowers are in early stages. I just kind of want to get your take and see if either it's going to be a good hedge against labor or if it's going to really like affect or wipe out the lawn care industry.
So I definitely don't believe it's going to wipe out the lawn care industry. I made a few videos on why not, but there's two major things that have to happen for. Well, let's just focus on one. The one major thing that has to happen for these robots to actually take effect in the mowing industry is they have to come down in cost. And what's happened over the past 12 months with inflation and the issues with supply chains, the cost of these mowers have almost doubled. And if you can get your hands on one, and the production, manufacturing, and transportation of all of their supply chains has been wrecked because a lot of them are made in China. And so you cannot pay $3,000-$4,000 for a robot mower and put it on every single lawn. You just cannot do that. Now, if that price comes down to $300-$400, or you can lease it for $20 or $30 a month, that starts becoming really interesting. But what's actually happened, in my opinion, over the past 12 months has actually hurt the evolution of the robots, because the number one thing we're all looking at is the cost. And so if I have 500 lawns like we do locally, 500 recurring mowing customers, in order for me to get a robot in every single one, if I have to dump hundreds and hundreds of thousands of dollars in capital expenditures, and just to recoup that money is going to take a few years, and in a few years that technology is going to be completely antiquated, that's probably not going to be a very good use of my money. And so I actually feel like robots have taken a step backwards in the past year, and in part due to the fact that all these manufacturers are so backed up that they're not spending money on R&D, research and development. They're spending on just trying to get things out the door. And so just my humble opinion is that it's actually slowed down the evolution of the robots taking over. But I would not be afraid of the robots, because if they can take over mowing, I'd be thrilled out of my mind. So we can focus on more higher margin tasks like edging, blowing things off, mulch installation, trimming bushes. That's not going away anytime soon, or robots being able to take those things over.
Gotcha. And you think the same thing goes for like homeowners, like, like, oh, instead of paying, $600-$700 a year for lawn care, I'll just spend, $1,000 and, pay it off within a year, basically limiting the need to even hire lawn care workers.
Well, this is the thing, right? So let's break that down. So first of all, it's not 1,000 for most homeowners, unless you're talking about a very, very small lawn. So let's talk about a very, very small lawn. You're going to still need to pay about $1,500 to buy one of these machines. You're going to probably have to put the line, install the line on the edges. So with taxes, installation, the whole line, usually looking at least $1,500 to $2,000. And even if you do that, you still got to do what? Edge, blow things off, pull weeds, trim bushes, install mulch. There's like, mowing is just one very small component of taking care of a landscape. And so even if they did that, like the best thing in the world is if tomorrow Steel comes out and is like, we're going to give away these things for free. I'd be thrilled out of my mind, because every single time I saw an orange little robot running around on a property, I would be going directly to that house, knocking on the door and trying to upsell them on the things that mower cannot do. Because if they're going to get the mower, and they're going to get a robot on their lawn, it also means that they do not want to pull weeds, edge the lawn, blow things off. So I think robots for mowing would be the best thing in the world for professional lawn care and mowing professionals, because we'd be able to focus our limited amount of supply of labor towards having the greatest bang for our buck in terms of profit on other services that robot will never be able to do. So I'd be thrilled out of my mind if tomorrow robots could take over. And we could focus on more higher margin services, because the limit to almost every single, like, I only speak for Augusta Lawn Care because I know them the best, like all of our franchisees, 95% of them, their growth has been stunted by one thing and one thing alone: not finding more leads, not getting more customers, not getting more mowing customers, not because of the robots, labor. So if the robots come along and fix just a piece of that labor equation on our lowest margin service, which is mowing, I would be thrilled out of my mind. Makes sense?
Gotcha. Yeah, no, that makes sense. Yeah, like I said, I saw some videos. I didn't think it was going to. I just wanted to get your take on that and stuff like that. So I appreciate you taking my call, and definitely appreciate all that you do for the community. You're definitely a lifesaver, bro.
Cool. Thanks, brother. You have a great day.
Yeah, we'll see you. Bye.
Cool. All right. Feel free, if you want to call me The number here is, what is it? There it is. 361-733-3332. Give that number a call, and I would be very happy to talk to you about the recession, about all sorts of things. I have a whole bunch of questions. I know they're popping it in on the comment side. I would like to be able to make this more of a call-in show for today. We'll take a couple more callers, and then we'll call it a day. But let me just kind of filter through. I know a lot of people are making comments. So let's see here. Mike, do you think through that during the recession, companies that survive will be able to grow? I'm in my first year and do about $6,000 in monthly mowing revenue, but want to double that next year. Honestly, when you're at $6,000 a month in revenue, you're solo still. The recession is not going to have a big impact on you. You're going to actually do very, very well, because when companies go out of business, which is going to be that middle-sized company, 3 to 15 employees, they're the ones that are going to be struggling the hardest, in my opinion. You are going to do just fine. You're going to be able to pick up those customers, no problem. You're probably going to be cheaper than them, and you're going to be that cheaper option that homeowners will look for in times of recession. Who's really going to take off, who will create the companies of the 2030s that are massive in their markets and completely dominate, will be the ones that do continue to slowly grow, get employees, focus on recurring work, focus on systems, and just get by basically at the expense of their profit margins, but do continue to grow throughout the next couple of years. You can absolutely grow during recession. You got to build your business to be able to be efficient enough to be able to deal with margin compression. You have to deal with wage inflation. You have to deal with the cost of all this fuel going up. But if you can just stay in business and keep taking market share from everyone else that's losing customers, like, just wait. For every single Facebook group of landscapers, lawn care people, as well as every other home improvement industry, start complaining about customers not accepting, close ratio going down, no one's wanting to accept, and the phone's not ringing. Just wait for that to happen. Because for the past 15 years, we've been used to the phone ringing off the hook. We don't have enough. We have so much work coming in. You have to realize that projects like discretionary is going to disappear. Yesterday, the location I was just mentioning had 71 estimates for recurring work. And literally none of those estimates, I shouldn't say none, probably 2 or 3 of them were. But I'd say 95% of them were for recurring work and property cleanups. They were not for install a patio, install a wall, all the rest of it. It is for services that must be done, not what can be done. And I'm just, man, it's going to happen. In 6 months, I'm gonna get a ton of calls from people that are going out of business. They've burned through their pipeline of projects. They don't have any recurring work. And now they're wondering, should I be laying people off right now and letting them go? Should I be discounting my services and just basically giving things away to keep my crew busy? That's what's going to happen. Look at the number look this up on Redfin. You go to Redfin Data Center and see how many houses are on the market in your local area that have been on the market and lowered their price. That number has skyrocketed in the past month and a half, because interest rates are going up and the affordability of houses is going so low that people have to drop the prices in order to sell their property. And when you just cannot realize, if you think that oil has a correlation with inflation, like I just mentioned, like everything in your house is made out of oil, was produced with oil, batteries, phones, rubber, metal, every single thing was made with oil. Correlation between inflation and oil is almost direct. If you think that's true, you've got to realize that the housing market is directly correlated with home improvement. In the home improvement industry, every single industry and service that offers around a house has a direct correlation to the real estate market and how well it's doing. And so we've been in boom town for literally the past 12 to 14 years. And that time has come to an end. Next caller says Florida. Area code is 321. Welcome to the show.
Hey, what's up, Mike?
Hey,
how you doing today?
Good. How you doing? What's your name?
I'm doing great. My name is Ruben.
Ruben, what's up? What's your question?
Hey, man. I work in a lawn maintenance company. I'm still new in the business. This is my second year on it. I'm a solo operator, and so far so good as a solo operator, but I feel like I've been hitting I don't want to say a ceiling, but somewhat of a ceiling. And I was wondering, besides mowing and all that stuff, what would be like that hook, I want to say, besides
the mowing that you will recommend for a solo operator, kind of pass that feeling? Because I feel like just by mowing and mowing, I want to make more money. So what would you recommend for a solo operator?
Yeah, like I would focus on increasing the amount of revenue, the annual value of each customer by trying to add ancillary services besides mowing. Because almost every single one of your mowing customers also has needs for weeding, bush trimming, installing mulch. You know, if you really want to go further, which I wouldn't recommend if you're trying to scale the company, but like cleaning out gutters, pressure washing, they need all of those things. Anyone that hires someone to mow lawn
Yeah.
is not, it's not like they're going to hire you to mow the lawn and then go trim their bushes. Most people don't do that. If they hire you to do their lawn, they're going to hire someone to do everything around their property because it's the type of person that they are. And a lot of people are like, oh man, like the baby boomers, like, and I believe this, next 10 to 15 years, the money's going to be on the baby boomers. But here's another little news flash, and that is the millennials are the biggest part of the housing market right now in terms of buyers. They are going to be the next generation. And guess what? Millennials, we don't want to mow lawns. We don't want to work outside. We don't want to get our nails dirty. And so anyone that's willing to do something that someone else is not willing to do has great job security. And so you're going to do fantastic. I think I would focus, if I was you, if your goal is making more money, realizing that your mowing customers
Yeah.
have other needs, and try to focus on marketing to them. You've already developed the trust with them. And the same way we talked about like recurring work being more sticky, it also, you're going to have a higher close ratio trying to upsell compared to cross sell and trying to get more customers, right? So I'd focus on upselling your existing customers on bed maintenance. So if you're going to come and mow every week, try to sell them an extra $20 a week to pull the weeds, an extra $50 a month to trim the bushes, whatever it is. And if you're in Florida, you literally have to trim bushes like every couple of weeks. So you can really stack on those recurring services because, again, any homeowner that has you mow their lawn, they're not going to just like randomly wake up one day and be like, oh, they're going to mow the lawn and I'm going to install the mulch. No, like they need that service done. So it's just a matter of identifying those things, especially as a solo operator with you being on the properties. You can literally identify the issues with every single property. And what I would recommend is literally, I talk about this in landscapebusinesscourse.com, and that is having like I say annual, but you could literally do a monthly or quarterly inspection and have a checklist of all the services that could be done and check off the ones that they need done with a price next to it and give it to them. You're going to sell so much. You will literally take the value of a customer from $1,000 per year, which is probably what you're at right now per customer, to literally $2,000. You'll double it just by doing a property inspection on a monthly or quarterly basis. We do it usually annually when we're at our slowest time, like during the winter. We'll take our recurring customers, we'll just drive by all of them, and we'll just literally try to sell them every single service that we offer, if they need it, based upon their property with a price. And then they just have to accept those. So I would really recommend on upselling and increasing the annual value of each customer. That would be my recommendation.
Awesome, man. Thank you so much. That's good advice. Can I snuck in one more question though?
Go for it.
Besides lawn maintenance, I'm thinking about the future and all that stuff, and I'm dipping my feet into the cryptos and all that stuff, and I've created like YouTube channels and all that stuff. What besides all those things, what would you recommend as looking into the future as a business owner? I want to invest on some other areas. What would you recommend besides, what would you recommend as far as investment in the future?
Oh my. Okay. So let me ask you this.
I know it's a deep question. I know it's so many areas and all that stuff, real estate and all that stuff. But
yeah,
in the crypto market right now, it's kind of bearish right now. But I just want your opinion and all that stuff.
Yep. So when you're at the beginning curve, I wish I had my tablet and I could do a drawing. When you're at the beginning curve of building wealth, right? You're at if you're building wealth over time like this, and you're at the beginning stages as a solo operator. We're not talking about hundreds of thousands or millions of dollars that you're looking to invest. We're talking about thousands, right? And so you have to ask yourself, where can I get the most return for that money? And let's just say that tomorrow Bitcoin tripled, which would be it'd be like its all-time high if it tripled tomorrow, going from like 18,000 to like 60,000, a doubling or tripling or quadrupling even tomorrow. You would probably take your $5,000 and it would become $20,000. That is not going to make a meaningful impact on the curve of your wealth if you look at it in a 20 and 30 year horizon. All right, it'll make you feel rich tomorrow, but it's not going to do anything in that long-term wealth. Now, if you take that same $5,000 and you invest into your business, you're going to have something that potentially could lead to a much larger gain, and maybe in 5 to 10 years be returning $100,000 or $200,000 in profit distributions to you as the owner. That will get you further down the curve than trying to triple the money tomorrow. And by the way, you have no control if it triples tomorrow, or if it gets half tomorrow, or if it goes down 90%, like many cryptocurrencies and stocks have over the past few months. I would highly recommend you focus on the thing that you have proficiency, and you have a market. You have an imbalance in the amount of skill and knowledge about the industry, right? So what I mean by that is I would guess, do not have some sort of market advantage. That's what I was looking for. Market advantage when it comes to cryptocurrency. You don't know the next cryptocurrency, the technology. You're not a developer. You don't build the blockchain. And so you don't have any meaningful advantage against the market. And what I find, whether it be in business or investing or whatever it is, people fail to realize you only beat the market. You only get better returns than the market and the average and the mean than if you have that information. That's why hedge funds, that is why insider trading happens, is because people have information that no one else has, and that's why they beat the market. The only way you can beat the market is you have some sort of advantage. And so what I would ask you, and this is what I think every small business owner needs to focus on, is if you have experience in lawn care and landscaping, if you have experience in roofing, if you have experience in construction, and you are better than the average at that thing, that's the thing you should focus on, because that's where you'll get outsized returns, because you have a skill that is greater than the average. As soon as you have average levels of information about cryptocurrency or stocks or real estate, as soon as you have average levels of information, you will have average returns. And if you want outsized returns, if you want to take that $5,000 and in 10 years, it be worth $500,000, that's 100x return in 5 years. That's much more likely because you are taking a skill, which is lawn care and landscaping, that you have experience in, greater and far above that of a homeowner or the average person. If you graph out lawn care experience and skill on a chart, you're probably like the 95th or above percentile. You should go all in on that thing. When you take the graph of knowledge about cryptocurrency and experience cryptocurrency or stock market investing or real estate, you're probably in like the 5th, 10th, 15th, 20th percentile, like in terms of the experience, how many deals you've done, landlording experience, renovation, construction. So like, why get involved in that game until you have money created from your original pillar, your financial pillar, which is your lawn care business, then take that money when you can't get the returns that are outsized from your business, because like, buying more trucks isn't going to help me right now. Okay, great. That's when you go focus on investing in something more passive like real estate or stocks, etc. But I would highly recommend you take that money and put it in your business. That's where you're going to have the advantage over the market.
Copy that, man. Thank you so much for the info, man. Appreciate you, for real.
You got it, brother. Take care. All right. Next caller is coming from, I want to say it's Pennsylvania, but I'm not sure. It is from a area code of 814. You're up.
Yes, sir. I was calling in. I would like to, what is the best way for a lawn care business with 3 to 7 employees, not only to survive, to thrive through the recession or possibly depression coming?
Yeah. So do you mostly do mowing and lawn maintenance, did you say?
Yep. Lawn care is our primary focus.
Okay. And do you do treatments or mostly just mowing?
Mostly just mowing. We have about 125 customers and roughly
when was the last time you raised
$10,000
prices?
a week in revenue.
10,000 a week. Okay, good. That's good to know.
This spring.
What, you raised it this past spring on your mowing clients?
Yes, sir.
Perfect. So what I would be doing if I was in your shoes, I would be making sure that those margins are good. If you just raise prices, I'm assuming that you've been okay throughout the past few months, even though there is inflation and all the rest of it. Because if you raise price in the spring, you're probably good. I would make sure that your prices are increased on new customers as they come in, which might slow growth down a little bit. But if you have a sticky, high margin, recurring base of work, you're kind of set. So I would say if you're between 3 and 7 employees, 30, 40, 50,000 a month in revenue, is you are probably in a really good spot to grow over the next year or two as you start getting, because I'd imagine the reason you haven't grown as much is because of finding employees. And that's probably been your biggest problem the past 6 months. Am I right?
Yes, that is correct.
And so and I'm kind of assuming this, but if you just raised your prices, you probably have decent margins. And so you're going to be in a good
Yes.
spot over the next 12 months as companies with 40 employees start downsizing, as companies that have 8, 9 employees start going back to solo. As that happens, you'll be able to pick up those employees and fill in the gaps that currently you're having. So what I would do in the meantime is spend no money on marketing, stack cash aside. You don't have a problem with getting more work right now. So just stay your current size, even like the rest of this year, for example. Keep those margins high. Focus on not spending money. So not buying trucks, not spending money on marketing and advertising. Stack that cash, because a dollar saved right now is probably going to be worth $3 next year in terms of purchasing power, because the cost, people stop advertising in a recession. So money will go farther on Facebook and YouTube ads and Google ads and all the rest of it. It'll go 3 times as far when it comes to hiring. It'll go 3 times as far in terms of buying a truck. All of those things are going to happen during a recession. So I would focus right now on the fact that, hey, I'm going to just stack cash right now because I have a recurring base of work. I have plenty of work, and I'm struggling finding employees. Great. Focus on margins. You've raised your prices. Great. Keep that up. Don't spend any money on marketing, and just focus on really stacking cash right now. Then when all of this will flip, and that is marketing will get cheaper, getting employees will be easier, they'll be cheaper to get. That's when you'll be able to expand while everyone else is compressing and everyone else is getting smaller. Does that make sense?
Yes, sir.
Awesome, man. Best of luck. You have a great day.
Hey, thank you for all you provide, your channel for the community. It's great value for me, and God bless.
God bless you, brother. Take care. All right. Next caller it says from Austin, Texas. 512 is the area code. You are up. Go ahead.
Hey, Mike, it's Marcus out here in Texas, actually San Antonio, Texas. So my question is, how can I keep giving my clients that personal touch that, the small businesses can give while growing into a larger business with multiple locations?
Yeah. So, multiple locations. Are you having general managers at each of those locations, or are you just having like where you park the trucks at different spots?
As honestly, right now, I'm still small, just in my first year. But I'm trying to, think ahead and what I can do now to stay ahead of that. So in the future, it will probably just be like multiple trucks, and then eventually, moving into different cities and stuff like that. But I still want to give them that neighborhood lawn care feel for every location or every truck,
Yeah. Like first and foremost, I would say don't worry about it. This will be a natural evolution as the business grows. And thinking about it right now, honestly, is I don't want to say a waste of your time, because I understand you're trying to just plan ahead, but it's going to happen organically, right? The organization of the business will fall into place, because as you start growing, you're like, oh, like I need a manager. Oh, if I'm starting a second location, I need someone to actually manage that. They're going to be a GM, right? So you can always try to be personalized and things like that. And this is what's funny is right now, you are probably, as a small business, this is like the standard, right? And so when I say you, I don't really, it's really just like the average. Most really small companies try to act really big, and then as they start growing, like, oh, like I'm getting really big, I want to pretend like I'm small. This is why like big companies try to have this personalized feel, and like they try to make it look like they personalize emails and automations and things like that. And so everyone's always trying to be what they're not. And so what I'd recommend you do is just embrace who you are. Right. So like right now you are small. You can have that personal touch. You can know every customer by name. You can say hello to them. You can write them a card. Like I remember my first couple of years of business, I wrote every single person a Thanksgiving letter by hand, put a $5 gift card in there to our local coffee shop, every single person by hand. Like that was like super, super high touch. Right. That can't happen now.
Yeah.
10,000 people in the database. It's not going to happen. And so, but just embrace who you are in the moment. So in that moment when I'm small, I'm like, hey, I'm going to lean into being small and having that personal touch. When you're big, you're going to lean into the professionalism. You're going to lean into the automations and the fact that you have a credit card on file and you have all these systems in place and you have someone to answer the phone for 80 hours a week. Like that's what you'll lean into. And it's just a different demographic of individuals that will want that service. So instead of trying to be something that you are not, just lean into who you are, and you'll attract the customers that value that thing. And so don't think that what people value now which is you having a personal touch, is going to be what people want when you're a $10 million business. They're probably not going to be. If that's your goal and ambition to build that big of a business, the person hiring a $10 million business is not looking for someone who's personal. They're looking for someone who gets the jobs done, comes when they say, has automations, has a card on file, can call and get a quote, can call and get someone, basically at all office hours and not wait on the voicemail. So that's what people are looking for. So just realize that embracing who you are in the business is probably the best route for success. The same way that I would say that to, someone trying to make a YouTube channel or, become an influencer. It's like, look, just be who you are, because that'll attract people. If you're trying to be something else that you are not, it's just going to come across artificial. So don't worry about it. Honestly, that's American. Just don't worry about it. Be who you are at every stage of the business, and you'll attract a different type of clientele throughout the different life cycles of the company.
Awesome. Okay, man. Thank you.
Best of luck. Take care. All right. Next caller is from, it says, I want to say, is that Michigan or Missouri? I'm so bad at states. It's because I went to school in Canada till grade 8. And so I know the provinces and capitals of Canada a whole lot better than the states. So I don't know if that's Missouri or Michigan. Let me think for a second. Michigan, I don't know. But the caller is 248, and you are now on the show. Go ahead.
Hey, Mike. I'm actually from Michigan, by the way.
Sick. All right. Go ahead.
So my question is, how do you determine when to raise your prices, like in relation to inflation? Like, do you just reevaluate like every year, or how does that work?
I don't think I've ever said someone not to raise prices, but ultimately what it comes down to is supply and demand. What I mean by that is if the demand for your product and services is in excess to the supply, and the supply typically for us is going to be labor. If you're having a hard time finding laborers and you have all this pent up demand and people wanting work, really good idea to raise prices, right? So whenever demand is in excess of supply, which for us, we're selling labor. That's what we're doing. That's our supply. So whenever that is in excess, that's when you raise prices. That's why the cost of like used cars and trucks have gone up, because the supply is so low. The supply became so suppressed by COVID that the discrepancy to demand was so high, supply was so low, price goes up. And so what we got to realize as small business owners is, how do we create that discrepancy between demand, tons of work, and not enough supply? That's when you should raise prices. It's like we raised prices just recently, the past couple of weeks at our local shop, because we're like 6 weeks booked out and we only do simple services. So the fact that we like are 6 week booked out in June for us is crazy. Usually like 3 or 4 weeks. So that massive difference between demand and supply, that's when you got to raise prices. Does that make sense?
Yeah, that makes sense. So you're basically just constantly watching the market and raising it based on that.
Yeah, and really judging based upon like, okay, if I'm having a really hard time finding employees, guess what I have to do to find more employees? I have to raise wages or benefits or something. In order to compensate for that, I got to raise prices, right? And so by doing that, that would raise supply. So, right, you're always going to do one of two things. You're either going to, you can increase supply, hire more people, or you can reduce demand. That's raising prices. So if you're having this imbalance of really high demand and low supply, I wish I had a chart, sorry. If you're having really, really high demand for your products and services and really, really low supply, you can do this. You can fix the problem by doing two things. Either one, hire more people, increasing supply. And if that's not possible, like in this type of labor market, like I just can't find people, that's when you reduce demand. And how you do that is you raise prices so your close ratio comes down. And what I've found when I talk about like Keith Kalfas and what he talked about last week and stuff is I have found that the stickiness and the price sensitivity of new customers is greater than old customers and recurring services. And so that's why I really love being able to have a high demand of recurring work, of a whole bunch of recurring jobs, because I can raise their price and not lose 80% of them. Right. So does that make sense? I felt like I went off a tangent. I apologize.
Yeah, that does make sense. So you're not worried about the people that'll fall off because of a raised price, basically.
Yeah, like I'm a big fan of raising prices by 10% until you lose 20% of your customers, right? And that's usually when you're at your kind of profit maximization and equilibrium of not raising prices too much to have demand consolidation, but then still being able to keep demand high. You can't have demand fall flat. And that's what happened to Keith. Like he said, hey, all of a sudden, like I have a 10% close ratio. What happened there is you raise prices too high, demand collapses, And then the only way to get demand back up in that scenario is lower price. So, yeah, I need to graph that out. That would be a really good topic. Cool. Does that make sense?
That totally makes sense. Yeah, I appreciate the help.
You got it, brother. Take care. All right. Next caller comes from, it says Houston, Texas. Area code 346. Go ahead.
346, this me, right?
Yeah, that's you.
Oh wow, because they're coming about a pizza. Great, man. Thank you for everything you do. So basically, I have my own business, right? New Green Landscaping. Right now, I have around $5,000 every month, 30 clients, bi-weekly, and some of them are weekly. I live in Houston. I just want to know, what is the best thing you can do with cash during a recession? Because I've heard a lot of people say cash is king during that time. So I want to know, what is the best, I guess you can say, investment to make with $100,000 cash during that time?
100,000.
By the way, this is not my money. Yeah, 100,000. Like, this is not my money. This is my family's money. They've been saving for a while, and I guess they've been waiting for this. And I heard you say that one of the best times to make wealth is during a recession when everybody is panicking.
Mhm.
So this is like our time, to make the best of it. And I figured that you are one of the best people that I could tell this to, since you're a legend, man. So please help us out, quick, please.
So instead of just giving you a broad answer, let me dig a little bit deeper. So if you have $100,000, it's your family's money, and so let me ask some questions so I can give you a better answer than just saying what I thought right away. So, do you own a house right now?
No, I guess that's the thing. We live in a trailer park. The trailer is ours. We're only renting the trailer area or where the trailer is sitting. That's the only place.
Cool. That's great. So what's really cool about trailer parks during a recession is the value of the trailers actually usually go up because people are trying to downsize and move into them. Rent goes up, and because people can't afford the housing, and typically trailer parks do really well during a recession. So this would be my personalized advice, because this is not for everyone, but based upon your scenario, having $100,000 of your family's money, you do not want to put at risk. All right. But you also
No, exactly.
want to
That's right.
build something that is going to give more cash flow down the road. So this is what I would recommend if we were sitting down together. I would probably say, and thank you for being vulnerable enough to give all the information, because that's how I come up with a better answer. Like, this would be my personal recommendation, and that is put 50,000 of that aside for the business. Okay, that $50,000 is going to growing should be able to get the business from $5,000 to $6,000 a month to at least $30,000 to $40,000 a month, because you're going to need a second truck. You're going to need a couple employees. You're going to need a little bit of marketing, maybe a website, get a logo made, things like that. But that business can absolutely get to $30,000 to $40,000 a month in revenue, which is going to be a massive asset to your company, to your family in the long term, because that will produce cash flow.
That's right.
Massively. The next thing I would do, because $100,000 is significant and you don't need all of that for the business. At your size, it would not be wise to spend $100,000 over the next couple of years on your business. I would recommend 50 max, because that's going to give you a truck or two. It's going to, I'd say a truck, a trailer, a little bit more equipment, probably a storage space, and some marketing, some really good marketing, a website. You got to get a website to be able to get to that next stage of growth. So you'll have that with the 50. The next 50, I want you to go buy a house. And that's going to be something that you can long-term build wealth with and build equity in, so that as the recession comes out, that's where you'll be able to build equity in. And then that equity is something that long-term you'll be able to leverage to build long-term wealth for your family. And so I would not buy now. Now is a horrible time to buy real estate. But if in 6 to 12 months, as things start to crash, if you have that $50,000 ready to deploy, it'll buy what right now is probably $150,000 worth of buying power. Because eventually interest rates will come back down. They will, 100%. Eventually, housing, like the asset prices will come down. And so if you're able to right now get all of your ducks in a row in terms of finances and get a pre-approval letter for financing, go to talk to an FHA mortgage lender, get everything ready to be able to buy a house. Don't buy one, but be ready to buy it, so that when it goes to rock bottom, you're ready to pounce. And then secondarily, I would really focus on growing the business, because that's going to be the thing that can 10x over the next few years, versus a house that will double or triple as we come out of a recession. But we're talking about doubling and tripling in 10 years, versus your business can produce 15, 10, 15,000 a month in profit if you do it right. And that can literally happen in the next few years. Does that make sense?
Right. Yeah, that totally makes sense. Do you mind if I ask you another question?
Go ahead.
All right. So you said that if I was to invest in my business, again, this is not really my money. That's why I'm being so careful with it. Obviously, they can invest in me and they could probably make, I don't know, like probably a percentage of everything I make. I don't know how that would work. And thank you for the advice. My other question would be, since we're heading under recession, obviously spending 50,000 right now would be not very good because again, I'm a solo operator, right? So I'm just thinking if I was to spend 50,000 in the next few months or even maybe 2 years, like you say, the recession might last. It wouldn't be very wise because you said those kinds of people that are 3 or 2 or have between 3 or 7 employees, I think you said would be wiped out. So right now, what I was thinking is just remaining solo, obviously having what you said in mind as advice and obviously applying it to my case, invest on my business and probably give them some percentage of the amount that the business ends up making in the future. Now, my question is, during a recession, should I lower my mowing prices like during it? For example, right now I've raised them. So when we do enter the recession, when people are losing their jobs and everything, should I lower the mowing prices and then increase them once it's over?
No one
Just
should
to stay in
raise
business,
it.
or
No one should ever lower their prices. No one should ever lower their prices unless we go into a deflationary time when instead of having inflation, we have deflation. You should never lower prices because it's not like the cost of fuel is going to go down. Oh, sorry, I shouldn't say that. Cost of fuel will go down, but the overall inflation will not go down. Wages are not going down. We're not going back down to what we were paying a few years ago for wages. It's not going to happen. And so definitely don't lower your prices. Now, the thing that makes you different compared to what I'm saying is the people that are going to get wiped out that I said are at 3, 4, 5 employees. The reason they're going to get wiped out is because they don't have $50,000 of cash going into recession. You do. Right. So what I would do if I was you right now is go from 5,000, 6,000 a month in revenue to 10,000 a month in revenue without having to buy anything. You could literally, get some marketing material like lawncaremedia.com, get a website, literally spend a massive, like maximum of $1,000 on some good marketing, a logo, get a website off the ground. And that will literally get you from 5,000 to 10,000. That's what you're going to do this year. Right. And that's what you're going to do the remainder of this year. You're going to double your business in the next 3 to 6 months. 5,000 a month, 10,000 a month. That's absolutely possible. You don't need to buy another truck for that. You don't need to buy more equipment for that. You're not going to lower your prices. And then what's going to happen is you're going to still have all that money. And guess what? We're going to be in the depths of a recession during the winter and spring of next year. And that's when you're going to go make your move. During the spring rush of 2023, you're going to go get another truck. You're going to get a couple employees because they're going to be plentiful when there's a 5-6% unemployment rate, and you're going to scale. But right now, what I want you to do is focus on the things that don't take a lot of that money, right? So you're going to focus on marketing, logo, website, getting your business cards, getting door hangers, all that stuff ready. And you're going to start scaling the business, but you're going to do it without having to buy assets, which is a truck, employees, the more expensive things. You can hold off on those, but you don't need those things to go from 5,000 to 10,000 a month in revenue. You just need to sell more. And that is simply done by a website and some marketing material. It doesn't cost you thousands and thousands. So the investment of 50,000 is going to happen next spring rush when you need the capital investment to take it to the next level. And you will literally, in a matter of a few months, go from 10,000 to 30,000 if you have that kind of capital set aside. Most people won't. They don't have $50,000 at your size of business in cash. So they will not be able to take advantage next year. They'll either just stay at solo. That's what most people will do next year during the recession. Or if they have employees, they'll retreat back to solo because they don't have the margins to be able to get through. And they don't have $50,000 in cash.
Right. Well, thank you, boss. That's it. Thank you for, once again, I've been following you for a while and it's a pleasure to talk to you, boss.
You too, brother. Take care. All right, we got 2 more callers in the queue, and then that will be it for today. Next caller is from Calgary, Alberta. It says area code 403. Go ahead.
Yeah, hey Mike, huge fan of the show here. I just had a couple questions for you. I guess the first question here is just what should be the ratio of revenue producing employees to non-revenue producing employees?
Great question. It depends on the service type more than anything, right? So if you are doing commercial work only for like landscape maintenance commercial, you need you gotta have a very high ratio. So like I've seen as high as 10 or 12 to 1 of 10 to 12 employees out in the field to 1 office admin non-revenue producing employee. If you're doing custom work on like design build, I've seen it as high as 1 to 2. I've even seen in like heating and air conditioning, for example, 1-to-1 ratios where there's a whole bunch of salespeople and then there's a whole bunch of schedulers and like I've seen 1-to-1 happen quite often in some of those industries in home improvement. But when it comes to lawn care and landscaping, it really depends on the service. The higher the margin service, typically the lower that ratio is because there's more hand holding and there's higher cost of like designers and estimators, etc. And then when you go to a lower margin, you have to have 5, 6, 7-to-1 ratio at the very minimum.
Yeah, no, it's interesting. Yeah, we're in fertilizer weed control, so like relatively very high gross profit of like 73%. But then after the gross profit, that's where everything goes to hell. Like right now, we're a 1-to-1 ratio. We have 10 office, 10 staff, and but it's like it's hard to. There's a lot of customer services involved, especially on the weed control side and kind of fertilizer too, where it's sort of hard. Like we probably could skim down a little bit, but I just want to hear your thoughts on kind of a business like that where I feel like we need to have that 1-to-1, but I feel like we could probably definitely scrape by a bit more to be a bit more lean.
What I would do is I would chart over the course of a week what type of service, like let's say you have 10 services that you kind of offer inside of weed control and fertilization, right? Whether it be a certain type of fertilizer or spray or whatever you do, I would do that. And over the course of a week, have every single call that comes in your office marked as which one it falls into, which bucket does that fall into. And then I would look at the 1 or 2 of those services that take the most admin time and calls and customer service. And I take a really hard look at trying to cut them out of the business. Because if you can cut out those 20% of services that are causing like 50, 60, 70% of the customer service issues, that's what's going to allow you to have more of a 2-to-1 ratio because you can just get rid of more of that back end support.
Yeah, no, it's great advice for sure. And then just a last question here as well. So right now, in our office team, we have like a sales team and a customer service team where there's like 2 separate teams of like kind of 3 salespeople, 3 customer service people. But they kind of work on like different times. Like salespeople only work for like 3 or 4 months, and then customer service kind of like a different time of the year. My thoughts are just to merge them together into one position, where it's kind of more of a hybrid. They do both the selling and the customer service. What are your thoughts on keeping them separate versus keeping them together?
Yeah. Ontario, we have a couple franchisees up there, so I kind of know in the market it's very, very different because you have 6 months of snow, 6 months of non-snow, and it's very, very intense seasons because you got to sell all your weed control at a certain time, you got to sell all your snow plant at a certain time, right? So, I get it. I would try to merge it into one because it's going to cost you less. The reason I say that is because when you have an employee that has to be a high producer for sales and you're only hiring them for 3 or 4 months, you're typically going to overpay them. Just to keep them to kind of stick around. Whereas if you can keep them for 6 or 8 months because they're doing more of the service side as well, you can offer them a more of a long-term, lower pay scale position. And that might solve some of the issues in terms of your net versus gross revenue or gross profit. Sorry.
Yeah, no, for sure. Cool. That's some good advice there. Thanks so much, Mike.
You got it, brother. Take care. All right. Next and last caller. It says it's from Texas, right? From Ontario down to Texas. 817. You're on the show. Go ahead.
Hey, Mike, this is Tristan. Oh, I was wanting to know your thoughts on what's the best way to take the next step to like making your business grow. So we've got like our equipment, set goals to make a certain number a month, but we're trying to figure out what's the next step to taking the business to the next level. Flyers, door hangers, websites, kind of what are we looking at there?
How much in revenue did you do last month in June or in May? Sorry.
It was about 4,500.
Okay. And in just you said we. Is there another person involved?
There's 3 partners in the LLC.
Okay. And are you all working in the LLC or are you doing the work right now by yourself?
We all are in the LLC. We're all hands on.
Okay. And are you guys just doing this part-time on the weekends?
No, sir. We're doing it full time.
And total revenue in May was 4,500, you said?
Yes.
Okay, so are you guys charging by the hour? Like, because that would impute your very, very low hourly rate if you're working full time. So what's your hourly rate? Do you know?
Right now, we've wrote down our hourly rate to about $17.50 an hour per employee. We charge by the yard, but we pay ourselves via hour.
Okay. Okay. You're paying yourself $750. But what is your target hourly rate that you're charging the customer?
$125.
Per hour?
Yes, sir.
Okay, so something's not lining up because you made 4,500. If you're charging $125 per hour, it means that you only have 36 billed hours in the month of May, right? So if you take 4,500, divide that by 125, there's only 36 hours. So when you say 125, is that for all three of you on the property?
Yes, that's for all of us to show up on the property.
Got it. Okay.
So say we're mowing, we break down the cost.
Go ahead.
So the way we break it down is per yard. So we show up to a property and we know, say it's going to take us 30 minutes. We divide 125 by the 30 minutes. So you divide that by 10, and that's how we quote out their yards. And then off of that, then we charge that for the yard, if that makes sense.
Totally. So, right now you're charging about $42 per man hour. So 125 divided by 3, which is low. So I would really try, if at all possible, to get above $50 per hour. In my opinion, you can't make any money if your per man hour, per person, per hour rate is less than $50 per hour. Like ideally, that's more around $180 or $60 per man per hour, right? So I would first off try to do that. But right now, you're only selling 36 of those hours. So that's, if let's say you're working full time and able to do say 30, 35 per week, we're literally at like 25% capacity with the three of you working. Like you should be easily able to do 15 at least without even raising your prices, 15,000 a month for the three of you. You should be easily, honestly, with a little bit of a price increase, able to do 20 to 25,000 a month in revenue with just the three of you. So what I would really be focusing on is your density, because you're obviously wasting a lot of time either driving around or just getting to these properties because you're not doing, you're not doing 30, 40 hours worth of work a week. You're doing 36 hours in the whole month, right? So what I would recommend is really trying to take the customers that you have and try to get other customers, their neighborhoods, and really try to focus on getting some route density. So you don't have right now where 75% of your working hours are waste. You're only at 25% efficiency. So this is something like we track at p4psoftware.com. That is your efficiency rating. That is basically your clocked hours, your budgeted hours, how many hours you build out divided by your clocked hours. And right now you're on 20 to 25%. So to make that improve, you got to have better route density, and you've got to make sure you're on these properties longer by upselling the customer. So I would focus on two things. One, sell every single one of the neighbors that you currently have services. Really go after them with door hangers, knock on their door, the whole 9 yards. And then take your existing customers and try to stay on their property longer by upselling them more services, because you've got to get that efficiency rating over 50% to where you're able to do, let's say you did a total clocked hours of 100, you've got to have at least 50 of those on the property, right? So does that make sense what I said there?
Yes, it all makes sense. And I guess kind of going off of that, what would help us sell, get that next customer? I mean, we've got a website up. We do the next door. We go off of Facebook. In your opinion, what is the best route of marketing to new customers to increase that route density?
Yeah, I would 100% say that is print marketing and knocking on the doors of the neighbors of your existing customers. So I would assume you probably have 25 customers right now?
We're sitting at 32 currently.
Cool. So I would take those 32. I would say, okay, we're going to deliver door hangers to the 7-8 houses around this every single customer. And we're going to do it every single week. We're going to put a door hanger for a different type of service on those neighbors' doors. So you're going to you can go to lawncaremedia.com. You can make them yourself, and you can do it for one for mulch, one for property cleanup, one for bush trimming, one for mowing, whatever it is. And you're literally going to hit those properties every single week until they literally call you and tell you to stop bothering them, because that's going to be the best bang for your buck. And you're literally going to spend less than $500 to print off those door hangers, and you can knock on the door. You can give them a price by putting the price on the back of the door hanger. We have what's called instant quotes on lawncaremedia.com. You can literally put the price on there, and you're just going to keep doing that over and over and over. And if you take those 30 customers you have, multiply that by say 5 houses, it's 150 people that you're like your target. You have a target on the back of 150 new customers that are the customers directly next to the neighbors of your existing customers. That's who I'd be going after 110%. You don't need a lot of money to do it. That'll easily get you from 4,500 to 10,000 a month in revenue. And at your capacity level and your efficiency level, you'll easily be able to do it with the current, those 3 guys that you guys currently are using.
Okay. So in other words, just pretty much get hands-on, get in the field, go door to door, and then lead door hangers, pretty much just pester these potential customers.
Every 2 weeks max, like a minimum. Like every 2 weeks that you go to a customer's house, you should be putting door hangers on all their neighbors. You should be knocking on the door, saying hello. Hey, I could go ahead and trim that bush. Get your foot in the door. Like that 150 people, they are your target. That's the only thing I'd be trying to focus on.
All right. Well, that makes sense. And I appreciate you taking the call.
You got it, brother. Have a great day. All right. Well, thanks so much, everyone, for joining. A little bit of a longer episode today. I got stuff to do. I got to go run a business. So I got to head out of here. But thanks for coming on here. I see a few questions popping in here. There's a whole bunch, actually. Oh, mercy. I'm not going to be able to get to these. I'll get to these another day. One day, I'll get to these. I'll make another video, I think, about more about recurring work and the stickiness of raising prices on existing customers versus new. And it's going to be a good week. Got some good content coming down the pipe. Hopefully recorded all tonight. All right, everyone. Have a fantastic rest of your weekend. I appreciate you being on here. Because I have to pay the bills, make sure you check out landscapebusinesscourse.com, lawncarewebdesign.com. If you want a great website, go there. It's fantastic. We do almost 200 websites around the lawn care and landscaping industry. One thing I don't have in here, if you don't have a lawn care landscaping company, homeservicewebdesign.com. We also do it for other home improvement companies. AugustaLawnCareService.com, the best landscaping company in America. Check it out. P4P, you can check out p4psoftware.com /training. It's completely free for the training side of things. Talks about getting on performance pay instead of hourly. I believe that's extremely important as we head into recession to make sure you get on board. And I'm going to make a video, hopefully again tonight, that this is the time to switch to P4P. Because this is the time when you've dialed in your crew, you're mostly going to be more efficient because the lawns aren't growing like crazy during the spring rush. And so switching right now is important because when you go from hourly to P4P, you need them to be able to make from P4P and make bonus dollars right from the get. Otherwise, they'll get discouraged and they'll quit, or they won't vote on implementation, which is stage 3 of training. And so you've got to switch now, or you got to switch in the winter. So there's really, in my opinion, 2 different times to switch to P4P, either in the winter when you have all your crew gone and you can have them come back and it's changed, or during June, July, and August when things are slower, there's not the spring rush, and they're really efficient because the lawns are not growing by 2 inches an hour. And so this is the time to switch. This is the time that we originally switched way back in the day to P4P, was in July, August, and September is when we made the transition. So I highly recommend you do that now. Check out p4psoftware.com /training. It's absolutely worth it. And I think it'll change your business. Until next time, till tomorrow, have a great weekend. Appreciate all of you.